Good evening. This side Rahul Magan here is a Group Chief Executive Officer, Treasury Consulting. As we speak, Treasury Consulting is a multinational headquartered group based out Singapore. We are a multinational hedge fund who actively take positions in multiple locations like United States, Europe, and Asia Pacific region. But having said that, we are a proprietary hedge fund. By proprietary, I mean no third party. I repeat, no third party can invest capital in our fund. Please take a note of that. Today, I would be covering a very important topic which I noticed, especially in the Indian capital markets. And the name of the topic is known as tinkering. I know that 99% of the people haven't thought that tinkering might be a topic for discussion on YouTube. Now, first of all, before I move forward, let me explain what is tinkering. That's more important. Guys, in any capital market, be it India, United States, Europe, Singapore, we have investment banks. We have brokerages firm who give the price targets. Example, in India, we have Deutsche, Goldman Sachs, JP Morgan, Credit Suisse, Citi, and many others. Now, that's a completely separate fact that 99% of them have a history of frauds, scandals, fines, corruptions, investigations, and even today. The analyst, theoretically speaking, those who are working in these brokerages firm, they came live on business channels. Example, CNBC Awaaj and many other business channels. And they gave their price targets. Sometimes they do not came on business channels, they came on their websites and give a price target. Now, when you give a price target, so let's take a simplistic example. I repeat, it's an example. When you give a price target, say TCS, you are giving a price target of 4,500. You have a certain data, okay, and that data is, I would say, collated by either that brokerage firm himself or that data is collated by that analyst himself or herself. So what I mean to say that in option one, these brokerages firm create a pool of data. Today, Mr. X is working, he will access the data. Tomorrow, Mr. Y is working, he will access the data. Day after, Mr. Z is working, he would access the data. Sometimes the data is not available, so that analyst himself or herself collate the data and put up in that repository, which is called data mart. But the biggest point is that data is subject to change. So today, if I'm collating the data of TCS, it may be possible that tomorrow TCS came up with a big project, they came up with a big signing agreement. Henceforth, we need to understand that the data is subject to change. This is something we need to understand very well. when these analysts give price target, they are susceptible to the change in the data. They are susceptible to the change in the macroeconomic variables. This is as per the books. But the reality is, today we have LinkedIn, we have YouTube, we have Twitter, we have WhatsApp, we have various magazines, we have paid research websites, we have Reuters, we have Bloomberg, we have metadata, we have so many things which can help us to predict any tail event. Now, let me tell you that where exactly is the fraud happening in the system. Now, there is a thing called post valuation tinkering. I repeat, post valuation tinkering. Now, again, I repeat that this is just an example. Suppose there is an analyst called Rahul Magan. I repeat, there is an analyst called Rahul Magan who is working in Credit Suisse. He gave a target of 4,500 to TCS, okay, Tata Consultancy Services. 99% investors in India, they have almost basic knowledge of the financial market. Rather, majority of the investors do not understand the difference between PE ratio and PEG ratio. Majority of the investors in India do not understand what the hell is intrinsic value. Forget the formula of intrinsic value. So they just see the TV and they see that, oh my god, Credit Suisse is giving a target of 4,500 to TCS. Today TCS is 3,200. So we having an upward scope of 1,300. So we would be buying TCS. Simple. Deal closed. What happened? And this is a live case. When Hindi media gave sufficient hype to a company called Tata Group, whose total debt is slowly and steadily reaching towards 300,000 crores, which is called 3 trillion. They gave hype to TCS and people bought TCS. Now, in post valuation tinkering, that firm, that brokerage firm, will try very hard to stick to the valuation of 4,500. And how? Very simple. They will give absurd or meaningless explanations or excuses that why TCS not reached 4,500 now, and why it might be taking some time for TCS to reach 4,500. These absurd or meaningless excuses will continue to flash on media that TCS is a great company, Indian IT industry having a great scope, and all these blah blah blah, right? Investor would continue to hold this stock. End result is being 8 to 10 months, and rather than going up, Tata Consultancy Services is coming down. Now, this is the one aspect of post valuation thinking. There is one more aspect of post valuation tinkering, and this you will see only in India and US. Now, what is that? Suppose you gave a hype to a stock, and fundamentally speaking, that stock do not deserve a hype. In the countries like India and US, people trust media blindly. And that's a separate thing, that because of that trust, they pay and paid a heavy price. History is witness that because Indian investors trusted the media, they paid a heavy price. Anyways, suppose you are saying that TCS is 4,500 and now it's been 8 months and TCS is at between 3,000 to 3,200. Practically TCS down to 2,800 also. Now, what is the second phase of post valuation tinkering and what you do? You immediately changed your outlook. The same brokerage firm would came in the public domain and say now they are not bullish on IT sector. What happens? They will cut the target of TCS from 3,000 to 2,600. Example. 99% investor do not know and remember that the actual target of TCS was 4,500. And these brokerages firm are so smart that they won't tell you that they are cutting the target from unachievable 4,500 to 2,600. Rather, the media, the compromised media, will show to you that they are cutting the target from 3,000 to 2,600. And people start selling that. People start selling, oh my God, Credit Suisse is saying that TCS will come down, start selling. And once the selling start, the price definitely come down, common sense. And then these brokerages firm will claim this fall as a success. See, I told you TCS will come down. See, it has fallen. But the compromised media alongside the compromised brokerage house will never tell you actually investors lost from 4,500 to 2,600 because they bought heavily assuming Credit Suisse is saying the right thing. Please do note that if you are in capital market, now whether you are a small player, you are a big player, or you are a ultra high net worth individual, you need to understand that tinkering is there which you need to learn point to point. But if you are unable to understand tinkering, then I doubt you would be able to survive, especially in the markets like India and United States. Because here, the level of corruption in the media, the level of corruption in the brokerages firm, the unwanted hype, the unwanted hike, the unwanted spreading of news is so high that even a well contained investor sometimes scuffle. Take a note of that. I know after watching this video, many eyebrows would raised, but who cares? This is Rahul Magan.